So what if you could own, say, a tiny piece of a skyscraper? Or maybe get a fraction of the royalties from a hit song? This isn't science fiction anymore. It's the reality of something called tokenization, and it's a technology that's basically getting ready to turn, well, everything into a tradable digital asset. Let's dive in and see how it all works.
And to get a sense of just how big this whole thing is, get this. The market for these tokenized assets, it's projected to hit a mind-blowing $16 trillion by 2030. Yeah, trillion with a T. So, this isn't some tiny niche trend we're talking about. This is a fundamental shift in how the global economy is going to work.
So you might be asking, okay, what does this actually mean for me? Well, imagine you could invest in a piece of prime real estate in, say, New York or London, or own a tiny share of a classic painting, or, how cool is this, actually earn royalties every time the next big hit song gets played. That's the kind of power we're talking about here. Tokenization literally puts that in your hands.
And look, this isn't something that's happening way off in the distant future. This trillion-dollar digital shift, it's happening right now. It's already started, and it's basically rewiring the very foundation of our financial system.
Okay, so a term you're going to hear a lot in this space is real-world assets, or just RWAs for short. And these are exactly what they sound like, the tangible, traditional assets that have been the backbone of our economy forever. We're talking about things like real estate, commodities like gold and oil, stocks and bonds. You get the picture. They're the stable, valuable cornerstones of finance as we know it.
But here's the thing. For all their value, these traditional assets are kind of stuck in an old-fashioned system. And that system has some pretty serious limitations. So let's break down exactly what those problems are and how tokenization is promising to fix them.
And the difference here is, well, it's night and day. Traditional assets are notoriously illiquid. I mean, trying to sell a big commercial building, that can take months, sometimes even years. And the barrier to entry, it's huge. You need a ton of capital. Plus, they're indivisible. You can't just sell off one room in a house, right? Tokenization just completely flips that on its head. It promises to create assets that are liquid, easy to trade, accessible to way more investors, and fractional, meaning you can own just a tiny, affordable piece.
So what's the magic behind all this? What's the tech that's actually driving this huge transformation? Well, it's tokenization, and it's really looking like it's going to become the new standard for how we manage assets. Let's get into the nitty-gritty of how it works.
So at its very core, tokenization is just the process of taking the rights to an asset and converting them into a digital token that lives on a blockchain. I like to think of it as a digital deed or a digital stock certificate, but for literally anything. A building, a piece of art, you name it. It's a super secure, verifiable digital proof that you own what you own.
Now, the engine that makes this whole system run is something called a smart contract. And it's not a contract in the way you might think of one, with lawyers and paper. It's actually a self-executing piece of computer code. The best analogy is a digital vending machine. You put in the right payment, and it automatically spits out the product. In this case, the ownership rights or the royalty payments. The key part? It all happens automatically, with no middleman needed.
The whole process of tokenizing something follows a pretty clear logical path. First, of course, you have to select an asset and get it professionally valued. Then you figure out the token's design and choose the right blockchain platform to build it on. Step 3 is the big one, creating that smart contract that's going to act as the digital rulebook. After that, the tokens are officially created or minted, and then, finally, they get distributed out to investors and listed on marketplaces so people can start trading.
Okay, so we've been talking a lot about physical stuff, but what about tokenizing something you can't even touch? This is where things get really interesting. We're now talking about one of the most exciting frontiers in this whole space, turning our ideas, our intellectual property, into assets you can actually buy and sell.
Right. Intellectual property, or IP. This is all about the intangible creations that come from our minds. Inventions, music, art, brand logos, all that good stuff. It's kind of like the invisible engine that drives all innovation. And now, for the first time, we can turn that engine into a tradable asset.
And the sheer scope of what we can tokenize here is just incredible. We're not just talking about patents for new inventions or the copyrights for a song. Think bigger. Think about tokenizing the trademarks for huge global brands or the secret formula for a best-selling product. We're even seeing it with in-game assets for massive video games or super valuable sets of research data. The possibilities are huge.
So what actually happens when you create a liquid market for ideas? Well, you get a whole new economy for intellectual property, and it's an economy that is absolutely filled with incredible promise. But we have to be real. It also comes with some pretty big hurdles that we still need to figure out.
The potential here is just massive. All of a sudden, things like patents and copyrights go from being these static, illiquid documents stuck in a filing cabinet to actual tradable assets. Fans can invest directly in their favorite artists and share in their success. Creators can get paid instantly and automatically through those smart contracts, cutting out a lot of the middlemen. Startups can fund their next big idea by selling tokens tied to their IP. And maybe most importantly, the blockchain gives us an unchangeable public record of who owns what.
And it's not just about creating new opportunities. This new efficiency brings with it massive cost savings. Because you're cutting out so many layers of intermediaries, tokenization can just slash transaction costs. I mean, look at this. One study estimates that it could save something like 4.6 billion euros in European stock trading alone by 2030. Now just imagine applying that kind of savings across every type of asset out there. It's huge.
But of course, it's not all sunshine and roses. There are some serious hurdles to get over. Probably the biggest one is just regulatory uncertainty. Our laws simply haven't caught up to the tech yet. Then there's the challenge of valuation. I mean, how do you accurately put a price on a fraction of an idea? It's really complex. And yeah, there are very real security risks, from bugs in the smart contract code to people getting their digital keys stolen. These are the big, critical challenges that the industry is working hard to solve right now.
So where is all this heading? Well, we're moving toward a future where basically every asset, whether you can touch it or not, is liquid and tradable. Let's take a quick peek at what's right around the corner.
And this quote from Sheena Lim, the CEO of one exchange, really hits the nail on the head. She's basically saying that by 2026, success isn't just going to be about creating a token. That's the easy part. The real test, the true measure of success, will be creating a token that people are actually trading, one that has continuous market liquidity.
This really captures the crucial next step for the whole industry, and it's a concept they're calling minted to mobile. The idea is that it's not enough to just create a static digital entry on a ledger anymore. The future is about making these tokens dynamic instruments that you can trade on your phone, use as collateral for a loan, and really integrate into the wider financial world. It's about creating truly mobile capital.
And so that leaves us with one last big question to think about. What actually changes when creativity itself has its own stock market? What happens to our world, to innovation, to culture? The implications are just massive, and we are truly at the very beginning of this incredible new chapter. Thanks for joining me.